Good afternoon and welcome to this week's edition of Halftime Talk. I'm delighted to be joined on the show this year by Vibhuti Garg, who's an energy economist with the Institute for Energy Economics and Financial Analysis in India, in New Delhi. So welcome, Vibhuti.
Thank you.
I'm going to kick off with the question. Obviously, we're towards the end of the summer, the beginning of the new sort of economic cycle in so many ways. There are a number of trends that continue through the seasons, but one of them, which has been building this year, and I wanted to get your views on, India has been brought into the sort of international energy oil spotlight for its purchase of Russian crude oil. I'm wondering, what are your thoughts about this? The foreign minister, of course, of India has spoken quite robustly about this, because generally from the Western perspective, it's sort of, violating the sort of sentiment of sanctions, but obviously not violating the law because there's nothing illegal about it. But generally, what are your views on it? Is it significant? Will it continue to grow? Give us your views.
Sure, Sean. Let me begin by throwing some numbers first. So as far as India is concerned, we import about 85% of oil. But due to COVID pandemic, imports of both oil and gas went down in financial year 2020-21, but it has gone up again in financial year 21-22. This is primarily because the economic activities which had suffered a setback due to account of COVID-19, revived back, and we are seeing increasing manufacturing happening, increasing farm activity happening. So there has been again a rise in demand. So while the imports increased by by only 8% in financial year 21-22 compared to 2020-21, however, it is still lower if we compare to the pre-pandemic levels in financial year 2019-20, so it's still 7% lower compared to the levels.
What does that represent in nominal terms? How many barrels a day is that?
It is about like financial year 21-22, we are importing about 212 million metric tons, whereas in financial year 2019-20, it was 227 million metric tons. So that's the volume which we are talking about. But that's on the volume. But if you look at the value, which is the import bill, it has gone up exceedingly by 94% between financial year 2020-21 and again 21-22. So it has risen from about 63 billion US dollars to now 120 billion US dollar. So it's kind of almost double up, leading to a huge trade deficit for the country. And the reason is primarily on account of the rise of, the price of crude oil, which has gone up by 77% compared to 2020-21 levels as of now, from 80 barrel, 80 barrel in 21-22, which was hovering around 44 barrel earlier. And if we take today's prices, it has risen by 127%, which because the crude oil prices currently are hovering around in the range of $100 per barrel. So this is the kind of stark change in the trade deficit that the country is kind of going or facing. So this increasing trade deficit and declining foreign exchange reserves for India, the country started scouting for cheaper options. So the country also witnessed, very high inflation post-Ukraine-Russia war as on account of increasing oil prices, which the country wanted to contain it. And that
Can it not get some of that back? I mean, obviously India is a big refiner of oil and creates oil products, and it exports quite a lot of oil products. Does it not get some of that deficit back?
Indeed. Again, if you look at the refined petroleum product exports in volume, which has gone up by 10%, but in terms of value, it has gone up by 107%. But if you compare it, it's still minuscule. So our exports have gone up from 21.4 billion US dollars to now 44.4 billion US dollar. Whereas the overall crude oil import, we were talking about some 200 odd billion US dollar. So the export does make up for some amount of trade deficit, but it is not as high as the amount of crude oil we are importing. So yes, we still are facing huge current account deficit on account of rising import oil prices that we have witnessed in just last couple of months alone.
So of course, when Russia comes along and says, well, I see your pain, here's a barrel of oil at market minus 20, $30, whatever it is, it's very difficult to say no to that.
Exactly. So if you will hear what the Indian government is saying and the refinery officials, they say that it's primarily on account of commercial reasons than anything else. And this has become critically important when you have seen the downfall of your neighboring countries like Sri Lanka, which is facing huge economic and human crisis because of their dependence on expensive imports. So from energy security perspective, and also to reduce its import bill on account of prices, more than doubling up for crude oil, the Indian government is kind of resorting to buy cheaper oil from Russia.
I mean, you'd have to say it. So Europe is still buying oil from Russia, not at a discount, unfortunately, but they're still buying it. So that it certainly feels in some ways like a double standard, criticizing India, given that Europe themselves are still doing so. What is your outlook for that from the point of view of a deepening? Because India obviously is a major destination of Middle Eastern oil, where we are in Dubai and the Gulf. It's increasingly a big destination for US oil coming out of the United States. I'm wondering, where do you see this going forward? Will Russian oil have a permanent growing home in India, or will things recalibrate? What is your outlook for this?
See, from again financial year 21-22 to this quarter, of 22-23 in April to June 2022 period, the oil imports from the Middle East, which is India's biggest sourcing region, slipped to 61.9% from 63.9% in the previous 1 year, while the share of Eurasian region, which includes Russia, in India's overall crude oil imports reached a record 18.8%, which was earlier 3.4% in the preceding 12 months. And from North America, which includes US, Mexico, as well as Canada, it almost half to 6.8% from the previous 12 months. So yes, we are seeing the change in dynamics and the change in, who are the biggest suppliers. So Iraq still continues to be the largest, while Russia is now the second biggest supplier to India, kind of replacing Saudi Arabia. I think the whole dynamics would depend on what kind of prices are we seeing in the international market. As I said earlier, that India imports 85% of its oil. If there is softening of prices again, and we are able to secure or procure supplies from Middle East or Africa or the likes, or even US at a reasonable price, I think the dynamics would change. But now with such high global prices and Russia offering some discount, the discounts have also gone down. It started with $20-$30 barrel discount to begin with, but now what we have been seeing is just about $7 to $8 discounted price. So if the price correction happens, maybe Russia won't be the biggest supplier. But if the situation continues for long, yes, we will see probably increasing supplies from Russia.
We've seen around the world, Vibhuti, the impact of this energy security crisis in China, in Europe, of course, where the fuel mix is changing, that people are given the price of gas turning to coal, or given the price of oil turning to, and the flows are changing in terms of obviously Russia coming to India. I'm wondering, from a fuel mix point of view, is India adjusting at all, given the dynamics, the cost of gas and so forth?
Yes. So the Russia-Ukraine war has led many countries, even including India, to turn inwards and rely on what is available in the domestic market. So India is trying to enhance its limited domestic oil and gas production, as well as domestic coal reserves. So from energy security, and again from protecting itself from price volatility of imported fuels, the strategy is to start exploiting, more and more domestic resources to meet its energy demand. So while we talked about high oil prices, even price was we did witness price volatility in imported coal price, which has made it really expensive and unreliable. So costs have gone up. And if you look at imported coal price in Australia, South Africa, or even Indonesia, who are the main suppliers of imported coal to India, prices have gone up. And so what the Indian government strategy is to kind of enhance or increase its domestic production of the fossil fuels. And India has a lot of coal potential. But let's not discount the fact that India is also kind of have big plans for renewable energy deployment. India updated its revised NDC, that is a nationally determined contribution, recently, and has kind of increased its ambition. And that kind of shows India's commitment to clean energy fuels as well. And it's aggressively increasing its renewable energy deployment too.
Vibhuti, even with this significant increase in the price of energy in India, and of course, it's not unique, the whole world is dealing with this at the moment. But unlike other parts of the world, which are standing on the doorstep of recession, India's economy appears to still be growing at a decent rate. And so my point is, it would appear that the energy bill, this very large deficit you described in oil, is not yet destroying demand, is not yet damaging the Indian economy in any notable way, or is it? What's your views on the impact that this energy bill, this increase in energy costs, is having on the Indian economy, and what will it have in the coming 12 months?
I would say if you'll see the first 3 months of 2022, we grew around at a rate of 4.1%, which was slightly higher than kind of the market forecast of 4%. But for the overall 2021-22, the economy advanced by 8.7%. So
Is that when you say 21, 22, that's fiscal year 21,
that's
22?
fiscal year 21-22. The Indian
And that
economy
is from July to June?
from April to March.
April to March, okay.
From April 2021 to March 2022, the Indian economy grew at the rate of 8.7%. And as per the Reserve Bank of India, and some of the other estimates from the World Bank or IMF, the GDP growth rate for financial year 2023 is expected to be around in the range of 7.2%. So while there was some disruption or some slowdown because of the rising Omicron infections, and also with elevated energy prices, and there were huge supply side constraints for renewable energy deployment as well. But we have seen the economy picking up. We have seen manufacturing output going up, the construction activity as well as the farm activity in India going up. So we are expecting a very robust growth. While the earlier expectations were in the range of 8 to 9% or even much higher, but now India is expected to grow its economy in the range of 7.5%. And that also implies that for electricity demand, again, we are expecting that the demand would go up by 6 to 7% in 2022 as well as in 2023, on account of, as I said, rising consumption, rising manufacturing activities that are picked up in the country post-COVID.
And what does that tell you? Obviously, the growth out of COVID, the big numbers, 8% you said for fiscal year 21-22, was similar. A lot of places had a big recovery number and then plateaued again back to sort of trend lines. But what does it tell you that India, because the narrative from New Delhi quite often has been to OPEC and to Saudi Arabia, oh, you can't have oil prices this high because the Indian economy and major emerging markets cannot handle this level of oil price, let's say $100 as it is today. But it would appear that India can now handle that oil price. Maybe not 10% growth, but of course, 7 is still a very big growth number. Can India sustain at those levels with oil at $100 a barrel?
Um, Actually, if you'll see what we witnessed in the last few months, both our wholesale price index crossed double digits, which was in the range of 15%, and even consumer price index reached the comfortable 6% mark in the month of May and June 2022. And the consumer price index is still 6.7% now, as is direct correlation with inflation and the fuel price rise. So India did experience and is still witnessing very high level of inflation. And given that the government cannot pass on these high costs to the consumers, so for some items, the subsidy burden for the government has gone up. The fertilizer subsidies in India, which is very, very critical for our agricultural growth, have been above a trillion rupees, or almost 14 billion US dollars for 2 years, and are expected to double or to 2 trillion rupees or 28 billion US dollars for the ongoing fiscal year, due to the high, gas and the urea prices. So while Indian government also did away with subsidies on liquefied petroleum gas cylinders, which is extensively being used in India for cooking, but is now again reintroducing the subsidies back again on account of high prices. So for some sectors like city gas distribution, government kind of restricted that only domestic gas will be used and no imports because the prices were much higher. And for other, the idea is to switch to other fuels. Like there is a lot of emphasis on clean transportations through electric vehicles for India to reduce its oil import bill. And further, like India wants to become an export hub for green hydrogen and start using it for other hard to abate sectors. So clearly, there is a shift to clean energy alternatives as something the country needs to actively pursue if it has to protect itself from the vagaries of high imported fuel prices. So this is something which may not be as sustainable in the long run because it implies huge subsidy outgo for the government for some of the critical elements to run the business.
Just to wrap up on that, the we've seen that this current global energy security crisis, this global energy commodity prices and inflation are having a very negative impact, as you mentioned earlier, on Sri Lanka, your neighbor to the south, on Pakistan, your neighbor to the west, on Bangladesh, your neighbor to the east. So clearly, the growing stress of both elevated commodity prices, strong dollar, etc., is having an element of contagion. I'm wondering what that means for India. What's your outlook for that contagion? And what role does India have to play in stabilizing its region of influence?
I think India needs to actively pursue developing renewable energy, which is, we have seen the prices going down. It is one of the least costs of meeting your energy demand needs. And further, we are expecting the prices to go down further. As well as for increasing share of renewable energy, we would need flexible generation sources like battery storage. And again, we did see prices going down, and for the last couple of months, because of supply-led disruption, the prices kind of increased, but we are hoping the price correction to happen again. And increasingly, India will be in a position to deploy more renewable energy, which is intermittent, and balance it with flexible battery storage and as well as pumped hydro. So I think that's how India can contain and also from the energy security perspective and for the price volatility perspective to deploy more and more renewable energy. And India, is already cleared its revised NDC, which will be submitted to UNFCCC soon, where India has enhanced its ambition to meet 50% of its installed capacity from non-fossil fuel energy sources, and also to reduce its energy intensity of the economy by 45% from the 2005 levels by 2030. So I think we are in the right direction. We just need to accelerate the pace.
Do you think India has an ability or a responsibility or a role to stabilize its neighborhood? I mean, it's allowing China, or not allowing, but China is being very active in helping to at least engage in Sri Lanka, engage in Pakistan, Afghanistan also. These are all immediate bordering countries to India. And yet India doesn't seem to play a role beyond its borders to stabilize the economic environment. Does it not have any risk, at least from economic contagion, if these countries collapse?
Oh, it definitely does. So under two big initiative of International Solar Alliance, where they are trying to help not only its neighboring countries, but a lot of other countries in Africa and elsewhere to access more and more renewable energy, whether it's on the technologies or whether it's on the financing. So India is kind of acting as quite instrumental in ensuring, all the countries are able to meet their energy needs through increasingly deploying more renewable energy. And one other initiative that India took was One Sun, One World, One Grid kind of a concept, where they are trying to um, uh, facilitate more cross-border exchange of energy. So I think from that perspective, India is bilaterally as well as under through these different initiatives trying to see how other countries can increase renewable energy deployment and at cheaper rates, so that uh, not only India benefits, but also India is giving a huge amount of boost to domestic manufacturing. So again, trying to reduce its reliance on China or other countries, or where domestic manufacturing of modules, which are critical for renewable energy deployment, happens in India, and also looking at exporting these technologies to the neighboring countries as well. So yeah, India has the intent and is moving in that direction.
It certainly will be interesting to keep an eye on and to watch that growing as the size of India's economy continues to grow. I mean, at 7%, it's a big number. But
Right.
of course, the size of the economy is still not massive, although growing now, I think, multiple $1 trillion economy. It'll be interesting to see how it extends that influence in its own region. Unfortunately, we have to wrap it up there, this week's edition of Halftime Talk. Thank you so much, Vibhuti Garg, who is the energy economist at the Institute for Energy Economics and Financial Analysis in New Delhi. Thank you so much.
Thank you, Sean. It was lovely speaking with you.